We got to start with the stock of the day, and that is Snap. Miraculously, the stock of the day is Snap. Shares up 27% this morning. Snap's fourth quarter loss was not as big as expected. That counts as a win for this business. They stopped the bleeding in terms of the user base. And look, for all the fun that we poke at Snap, I think that second one is both real and important, because the two previous quarters, Snap was losing users. They stabilized that this time around.
Yeah, I mean, at least you stopped the bleeding. Right now, you're at 188 million daily active users, and the stock is up, over 26% as we're taping this, but that really is just bringing it back to where it was in September. So not a ton to celebrate if you are one of those unfortunate Snap shareholders. But yeah, in the case of Snap, even though the loss was narrower than anticipated, I still don't see a whole lot to get excited about here, because over the past year, in 2018, the company burned over $800 million in cash. And right now they're sitting at about $1.2 billion in net cash on the balance sheet. Maybe it's a little bit more than that. But essentially, with their current cash burn rate, they just have a runway of about 18 to maybe 24 months with their current cash on the balance sheet. So at some point, they're going to have to raise more money or just really accelerate the pace that they're narrowing that cash burn. So they are in a bit of a pinch. They're trying to do more, like they went through a redesign of the app through 2018, really trying to point users more toward publishers, stuff from media outlets like NBC, CNN, and it seems like that's worked. They say that engagement is stronger. As we talked about, daily active users is stabilizing, but still that's a far cry beneath the engagement that you see with Instagram or Facebook. Like, they're just going up against titans in this space. And when you're burning money still at such a huge rate, and you're at this point, it's a win to just stop the bleeding. It's tough for me to get excited.
It is, and just to go back to the stock for a second, first, recognize that this is one of the most heavily shorted stocks in the public market. So some healthy portion of this boost that we're seeing today is short sellers saying, okay, I'm going to go ahead and cover my short. And as you said, I mean, the stock is back to where it was in September. This is a company that went public 2 years ago. The IPO price was $17. It's up big today, and it's still under $9 a share. So it's hard to get excited about this unless they can truly, they stop the bleeding. If they come out 3 months from now and start to show some actual growth, start to show an actual operating profit, then maybe the narrative changes. But for right now, this seems like one of those businesses where the clock is ticking. And as you said, the clock is set for 18 to 24 months.
Yeah, they're facing pressure in a lot of different ways. And then in the meantime, you're seeing engagement users continue to rise at a pretty incredible pace with Instagram, Facebook, these other social media platforms. So for Snap, I agree with you. They really need to find a way to demonstrate to investors that they are keeping the platform relevant and making it increasingly relevant. And that'll be something we track through daily active users, time spent on the app, things like that. And this quarter, I guess, is a start. I mean, it's flat quarter over quarter. Hopefully they can tick that up, and in the meantime, continue to grow revenue, hopefully accelerate revenue, minimize losses, shrink that cash burn, and that way, that at least buys them more time to continue to figure it out. But I still don't feel like they've found the formula that'll make them a sustainable business at this point.